I hope everyone's doing outstanding. September 3rd, 2024. Welcome to the first trading session of September. Futures are pointing to a lower open here, and we're heading into a historically turbulent time frame between September and October. Are we headed to new all-time highs on the S&P? The Fed, we're going to get in 2 weeks. So 2 weeks from tomorrow, we're going to get the Fed decision, 100% probability of a rate cut. What does that look like? So a lot of things going on. And then we have the ending, kind of the trickle down of earnings season, still some names reporting. So I'll talk a little bit about that. But S&P rallied on the PCE data on Friday. 557 and 555 seem like the key areas. Seems like every time since mid-August we get to those areas, they provide some kind of support resistance. It was resistance on the way up mid-August on 555, and then it just seems we're chopping in there. And I keep saying, I've said it a lot last week around this possible double top setting up on the S&P. So want to see this consolidation break at some point. Uh, I I'm more biased to the upside. I think there's going to be more highs coming in the coming over the next couple of weeks or so. And then take also the Dow. Look at the Dow components hitting back-to-back all-time highs heading into today. And pending any craziness with the jobs report, I think that the backdrop for the economy is still pretty strong. So not much in a way of catalyst outside the job. So we have the JOLTS report on Wednesday, which wasn't a data point that most people looked at over the last couple of years, but all of a sudden becomes this big uh, big talking point. Want to see about job openings. Then we have weekly jobless claims on Thursday, and then that August jobs report on Friday. Was that a one-time anomaly? Was that just a little blip? And then we're gonna show a rebound. Who knows what that all looks like? What is the backward revisions after we had that big benchmark report? Either way, it makes for a great narrative and headlines for people to click on. Hopefully, it doesn't become a headline. Markets can find some support, data comes in line, and then we all eyes will be on the Fed in 2 weeks. IWM was solidly in the green on Friday, rallying with the rest of the market. Here it is in the pre-market with the small cap futures down 1%. Hopefully 218, excuse me, 215 is that line in the sand, similar to 555 on the SPY. So don't want to see that get broken. We're at 218 here. So those will be two key areas I'm looking at. I put on the watch list 557 on the SPY. If that breaks today, I might look for a hedge put or two, just not because I'm bearish, but just to protect some of the call positions. All right, so that's individual name. That's overall market. Individual names, clear, secure, breaking out of that bull flag. Solid session on Friday, nearly up 2%. I didn't want to be, and I always say this, in a spot where I lose some profits on the calls. There's only 2 weeks to expiration. Well, actually 3 weeks, excuse me. So I went and locked the 29 strikes, added some higher strikes. Don't be surprised if I add some October calls, especially if the stock continues to find support. It's almost like it's overshooting, and I mentioned it last week. It has a 20% short interest, so at some point you have to think people. I don't know if they'll throw the cards in on their short bet, but maybe they start to curtail some of that. So that could be more fuel to the fire for upside. Just a great story. I've talked about it. Fundamentally sound, tons of cash, dividends, stock buybacks. I can go on and on. It IPO'd in 2021, so it's tough to use that as a reference point for a possible longer term target. But it traded into the 50s. So you take that number with the fact that the company has bought back all the post IPO shares that have been diluted. So it's pretty much flat dilution. So the outstanding share count's the same. Could I see it in the 50s in the next year or so? Possibly. So don't be surprised if I add more strikes there and clear. Uh, and you look at a longer term chart back 2021, that's kind of the spot. Well, 3250 was back at the end of 2022. And then you got to start looking back in 2021 to see some of the other areas that hit for support resistance. But we'll go up that branch, climb that tree when we get there. Hopefully we get there soon, but I'll be happy with 32 or so in the coming weeks. So that's clear, secure. Redfin got upgraded this morning by B. Riley. They took it from a neutral to a buy, raised their price target from 750 to 13, I believe it was. Kind of like just the kick it needed, just the medicine it needed to solve its meltdown from the last couple sessions. Four straight sessions from the downside after breaking 12. Still think this heads over $15 in the coming weeks. That backdrop, there's multiple tailwinds One of it being that the company is actually starting to perform well, right? So that's probably the most important, that they're going to turn profitable at the end of this year or start next year. And then you have the backdrop of lower rates, the Fed cut cycle. So all that both, and then you know this pent up supply demand dynamic with housing. So still like this one, love this one for upside. I was saying I was going to add some more strikes if it broke over 10. It almost looks like it's going to break over 10 before the bell here. So uh, probably wait for it. If it opens over 10, I'll wait for it to settle. If it holds that 10 handle, I'll look for more strikes. Still holding freebie September and November strikes on that one. Uh, put it on FinTwit and the private Twitter in the chat room on Friday in regards to Turn. So Turn Pharmaceuticals at some point will announce their phase 1 oral GLP-1 data. It could be this week, could be next week. It could be the week after. Hopefully it's not after my September option expiration. But I put it on the Twitter feed on Friday and also in the chat room. The October strikes, I'm trying to find a decent risk reward strike, and I still have the September. So if they do announce that and it's positive, I won't miss the move. And at the same token, if it's a miss and the October strikes are expensive on a risk reward basis, then I won't lose on both those positions. So I'll probably just wait to add Octobers until we get closer to September expiration. I also put on the watch list the scenarios. I think $5 or sub $5 if the data comes as worse than expected and there's severe adverse effects. If it comes in line with little or no adverse effects, I think it trades 13 to 15 bucks. And then above expectations, little to no adverse effects, I think it trades into the 20s. So just doing the quick math, that's a 66% probability of the September strikes paying, and they'll probably pay handsomely on that, the best case scenario. So really like Turn here. Probably just going to sit on my hands before adding October strikes. Depending, don't be surprised if I do add them, but I'll probably just sit on my hands there. Uh, Not much to add here on SE Limited. Just stock sold off 4 or 5 sessions last week. Showed a little signs of rebounding on Friday. If that breaks back over 80, I'll look for more strikes there. What else to say about Dell? It was a decent report. It wasn't like a blow the doors off the barn kind of report where a huge beat and raise, but I think it did help dissipate some of the concerns around margins, the AI side of the business, the backlog, things like that. Surprised it didn't break over 120. Probably not going to add anything just yet, but if it does hold its ground here, you take a look at the chop between 108 and 112. So probably 112, it's got to hold that if there is some weakness. If it does hold 112, maybe I'll look for some strikes there. Uh, HPE. So HPE is the spinoff from HPQ. I don't know how many years ago, but HPQ is more the personal side, the consumer side of the business, personal computers, laptops, all that fun stuff. And then HPE is more the enterprise, the big corporations, and the software side of their business was spun off. You take a look at HPE. Its last quarter in June, huge beat and raise on the AI backdrop or hype, whatever you want to call it. Stock went all the way from 17 to 20, 22 and change by mid June, and then it got sold off with the rest of the AI names, the Dells, the Nvidia, the Supermicro, so on and so forth. And then it hit bottoms at the start of August. It started to bounce here right at 50-day moving average 1963, closed at 1937. I think there could be an opportunity here for some calls to play for upside. The 22s, I think it's the September 22s I was looking as a possible setup for a decent risk reward setup into earnings. So don't be surprised if I add some strikes there on HPE. HPQ, some follow through on its earnings. So good sign there. I 39 bucks, I think, is where it's headed. It's probably going to take its time though, but still like that one for upside. And then last but not least, the NVX. And I've been talking about this one for the last 2 weeks after I closed my September strikes for a very small profit. I think 850 or so at least, and it just the premiums make it tough to play because even if it goes the right direction, it's the puts probably won't be up too much. But if it does find some weakness here, at some point I have to think maybe some of these bulls might throw in their towel, and there could be some acceleration to the downside. There's a huge gap back in May. I don't know if that's earnings or maybe they had some vague press release to some phone manufacturer. I'll have to go back and look, but that's kind of like it's $7, I think it is. So If there is a big sell-off and it does break into the eights, $7 could be a decent target. September strikes are a heck of a lot less expensive now, so don't be surprised if I add some SMCI inexpensive puts. And I think that's it, folks. Let's have a great day. I'll be back on audio later. Rock and roll.